OPEC ministers are at a conference in Vienna this week deciding how to respond to calls to produce more crude. OPEC and non-member countries such as Russia have been cutting oil output according to the terms of a deal that runs until the end of this year. But the U.S., China and others want OPEC to boost the oil output, and that would bring prices down. OPEC members Iraq and Iran are opposed. A decision is expected tomorrow. Meanwhile, analysts are talking about how the growing trade dispute between the U.S. and China might affect the flow of oil worldwide. They say Chinese tariffs on U.S. energy exports would have an impact on roughly 1 out of every 4 barrels of oil the U.S. currently ships to foreign refiners. If ultimately imposed, it could spark a significant shift in global crude flows. How could this all affect Canada and Canadian oil? Well, to answer that question, we have Dan Eberhart in Boca Raton in Florida. He's CEO of Canary, LLC, one of the largest privately held oil services companies in the U.S. Sir, it's nice to see you. And I wonder, on the one hand, we have the OPEC meeting. On the other, we have the concern and growing concern over what impact the tariffs might have. How much should the tariffs and that impact on flows of oil, how much should that be weighing on the minds of the OPEC countries as they meet in Vienna?
Well, I think it's definitely a dark cloud on the horizon as far as which direction they want to go. I think they want to make a clean decision as to what's best with them. But I think that they're forced to kind of examine this, new Trump era of trade and Trump's America First policy and how that's going to affect Europe, how it's going to affect the U.S. and Canada trade flows, and how that's going to affect trade with China. So I think all eyes are on Vienna right now.
The line that's jumped out at me on a lot of this is that 1 out of every 4 barrels of U.S. oil shipped to foreign refiners is going to be affected by tariffs. What does that mean, and what's the real world impact of something like that?
Well, the real world impact of this is a lot of the refineries are set up for specific kinds of oil. Oil is not just kind of one uniform thing. There's the heavy and there's sweet and there's sour and there's all different kind of grades of oil. So, for instance, with the precipitous drop in production in Venezuela, the heavy crude that refineries in the Gulf Coast in the U.S. are set up for, the tar sands oil from Canada is a great substitute input for the dropping Venezuelan production. And so when you mess up global trade and you mess up free trade, it could really interfere with that kind of tapestry of the way that refiners are set up.
And I mean, we've had this conversation about the tariffs, the sort of unintended consequences of the tariffs at just about every turn. And I think this is one of those situations where once it starts, the trickle-on effect, the domino effect, if you will, how far could this reach? I mean, what is the impact on the global flow if it's that extensive right out of the gates?
Well, for me, the problem with the trade war is you kind of win your half inning and then the other turn gets a bat, to use a baseball analogy. So the U.S. puts $50 billion of tariffs of $50 billion of goods from China, and then they reciprocate and then we reciprocate. And where does it go? No one knows. And as a CEO and as a business owner and as someone that has to plan for a supply chain and plan capital investments, it makes it really tough to forecast. Businesses need stability and consumers and investors want economic growth. And I really think that Trump's, trade war is a wet blanket on that.
Walk us through that, because you run one of the biggest oil services companies in the United States. How have you gamed out those numbers? What are your people telling you in terms of what this is going to look like if, and it's a big if still, if all of these end up getting implemented?
Well, first of all, I would say that the steel and aluminum tariffs, the price that we pay for goods, for those goods in the U.S. went up overnight when it was announced, up 23% in a matter of 3 business days. So, we felt the effects of that and are still feeling the effects of that when it was announced, not necessarily when it went into effect, as some of the politicians talk about. I also think, and I was just in China last week and the week before, in dealing with our supply chain, I think that it's had really a slowing or a chilling effect on, their willingness and ability to add a second shift or a third shift to keep up with our demands. I think that they're actually taking the opposite approach and kind of wanting to scale back and look more thoughtfully and look more completely at what they're producing for us and what their exposure is. So I don't think it's good for, the synchronized world growth that we have right now. I think it really has a chilling effect on that.
Certainly nearing the end of a cycle. And just lastly, you brought up the Canada as a decent replacement for Venezuelan heavy crude. We're already seeing more Canadian oil in refineries that generally take in Venezuelan crude. How much of an opportunity is there here for Canadian producers?
Well, I think it's a great hand-in-glove fit for, dropping Venezuela production for the tar sands to produce some of that heavier oil for these refineries in the Gulf Coast of the U.S. I think it's a hand-in-glove opportunity, and I think it's another example for Canada and the U.S. to work together as we've done in the past. To have rising standard of living and rising economic output for both countries. So I don't really understand why we would want to get in a trade war with Canada at all. 32 states. Have Canada as the biggest export market for 32 of the 50 U.S. states. I think that's something that the administration needs to think long and hard about before we're picking a fight with our friends.
Well, a lot of Canadians are asking the same question. Dan, really appreciate you coming on the show. Thanks for doing this. Dan Eberhart, CEO of Canary.
Thank you for having me.
LLC.